Hello, I'm Mark Lowdy. Singapore Investment Week is on, 25th to the 31st of August. And for many people, particularly those who've never invested before, it's the one chance to find out more about the market and to pick up a few skills about investing as well. I'm joined by Geoff Howie, who's markets strategist at the Singapore Exchange, for a little bit more about actually why you should invest to begin with. Hi, Geoff. Now, first, obviously, we know that we need to save for retirement and invest to protect against inflation. But why invest in Singapore specifically?
Well, Mark, Singapore is blessed as being one of the most diversified marketplaces in the world. When you're looking to invest in a stock, you want to be able to choose a stock or choose a couple of stocks that might perform differently in all types of different economic conditions. And Singapore, it's not, if you look at the top 10 stocks by turnover on a day-to-day basis, you have 5 or 6 different sectors represented in those top 10 stocks. If you look at the total stocks of the market, look at the 700 stocks plus that are listed on the SGX, that represents over 150 different specified businesses, specific businesses. So to sum up, I think as an investor, why Singapore? It is one of the most diversified marketplaces in the world. It is also one of the best performing marketplaces in the world in the year to date.
Really? Let me test you on that a little bit. How's it doing so far?
The year-to-date gains are approximately 15%. That's for the Straits Times Index, the benchmark index, which is made of 30 blue-chip stocks. They're very much household names to many investors. And then if you look at the broader market, your mid-cap index, which is mostly made out of real estate stocks, is actually up 20% in the year-to-date. And beyond that, the small-cap stocks would be, looking at the FTSE small-cap index, that's equaled the gains of the Straits Times Index, up 15%. So your broader market's up a little bit more than the Straits Times Index. Your Straits Times Index at a gain of 15% is well above all the advanced economies, certainly in Asia, and very much at the top of the table in terms of the global open economies of the world. Now, again, this comes back to that diversification factor that we discussed. Diversification is a key factor when you're considering investing in this market. Your STI, as you'll see in this pie chart right here, your STI, according to Bloomberg, your Straits Times Index, derives only 40% of its revenue. All these constituent stocks only derive 40% of their revenue from Singapore alone.
And that's that big blue part there on the right side.
Absolutely. And then you can see there's another 20% of the Southeast Asia economies, the ASEAN economies, as we say.
Right. That's the light blue part on
correct.
the screen. Right. Okay. So in other words, you're not relying on Singapore income alone.
No, you're not relying on Singapore income alone. So if you're looking at it at the stock market and choosing a stock from the diversification perspective, you can choose in terms of where the company's operating, where it's receiving its revenue, but you can also make the decision based on the product that we have. There is a number of different products. There are real estate investment trusts that are set up to distribute at least 90% of their income to the unit holders, the shareholders of these real estate investment trusts, many of which are being discussed here at the Investment Week.
Still, from a Singapore investor's perspective, they're usually bombarded with all sorts of marketing messages to invest in other countries, to trade the Hong Kong market, for example, and so on. What might be reasons not to do that?
Well, of course, you've got Singapore dollar, modest and gradual appreciation. If you look at the gains as of mid last week, you'll see the Dow Jones had gained 8% in the year to date. If you take into account the Singapore dollar appreciation to the US dollar and you had invested in the Dow Jones at the beginning of the year, that 8% gain would be eroded to about 3.5%. So you have to consider we are one of the world's best, strongest economies. We are one of the world's most diverse economies as well, which is reflected in the sectors. And we also have a lot of good long-term performance. You look at the gross domestic product growth in Singapore over the last 10 years, it's averaged around 6%. Over the last 10 years, your property market, your Euro PPI by residential type indicator, that's also up 6% on an average annualised basis. Your Straits Times Index up almost 6.5%. Taking into account dividend distributions over the 10 years, your average annualised return is around 9.2, 9.3% over 10 years. So in terms of being able to invest in the home markets rather than the overseas markets, as you discussed, we are blessed with performance in the last 10 years. We are blessed with a lot of diversification in terms of these markets. As we said, the STI derives 40% of its revenue from here, from Singapore alone. And many of these companies are very much household names. Many Singaporean households are well familiar with these companies from the start, whether it's the shopping malls they visit, whether it's their telecommunications provider, their transport method, where they eat. Many of these companies, you'll find many households are very well familiar with them as it is.
So if you buy their products and services, you might as well buy their stocks.
You're investing in the economy of Singapore, an economy that grows at 6% per annum. And as we said, your Straits Times Index, just on price terms alone over the last 10 years, has also averaged a little over 6% per annum.
One of the problems which SIAS President David Gerald talked about was the fact that you often read in the headlines about various companies having various issues, corporate governance type of issues. How fearful should investors still be of that? How far are we along on that journey towards a marketplace where there's full transparent disclosure and the companies that are listed on the exchange can be fully trusted?
Well, that corporate governance issues like other risks, there might be market risk, price risk, counterparty risks, a number of risks associated with holding stocks and owning stocks. That comes to the core of our investment strategy. It's always we have to trade off the potential return of holding a stock or a basket of stocks versus the risk of holding those stocks. Now, they might be, as you say, corporate governance risks. They could be general market risks. They could be economic risks. There are a number of risks that investors have the opportunity to build a skill to be able to identify what those risks are, make an informed decision on those risks versus the potential return of the stock, and therefore make a most informed decision they can when it comes to investing. As long as the investors have the opportunity to understand those risks, which are educated to investors on a regular basis through SGX My Gateway, through SIAS, through Investor Central, they will be able to make the best informed decision possible at the time.
Let me also shine a light behind the motivation for Singapore Investment Week a little bit. I mean, clearly for the Singapore Exchange, you want to make sure that more people participate in the market. But do you see a broader cultural shift going on where people generally have no choice but to become more savvy about their investments?
Oh, Mark, the days of putting the money under the mattress, even figuratively, are well over. As we know, inflation at the moment stands at 5%. Individuals have to take more responsibility for their investment decisions. I have to do that. You have to do that. We've discussed that. It's a harsh reality, unfortunately, with the world it is at the moment. You can't. You look at interest rates around the world. Our country, Australia, has one of the highest interest rates in the world at 3.5%, which is very small.
Very low. Yes.
And you compare that to the United States, which is, as we know, 0.25%, and then on the long end, I should say, this Operation Twist is keeping the long-term rates very low as well.
Well, the Fed's not going to move until late 2014, I think. So, in other words, your fixed deposit's not going to earn very much for quite some time to come.
Not for the immediate term.
Thanks very much. Geoff Howie from the Singapore Exchange. And Singapore Investment Week is on from the 25th to the 31st of August. Take the opportunity, find out more about the courses and seminars, and get in the know about investing now. The website address is on your screen. I'm Mark Lowerty. Thanks very much for watching.